Brian White, internet and software head at Monness, Crespi and Hart, and Deutsche Bank chief global strategist Binky Chadha. He's ready to talk markets. Binky, that's where we are going to start. Let's get right to it here. At the start of the year, you had expected that earnings would look pretty optimistic and good, but I need your report card right now on it, because if we put up the beats, I find this really impressive. 77% of the companies that have reported have beat estimates on EPS, and a little bit cooler on revenues, but 61% of the companies have beaten revenue estimates. How does that look to you? Interpret it for our viewers.
So, the most important point I would make is if you look at things in terms of the size of the beat, even in terms of breadth, what you're actually seeing is a pickup in beats. That's very unusual. So in terms of the size of the beat, we are talking about an aggregate beat for the S&P 500 of over 9%. A typical beat is 5%. We had beats all of last year, every quarter in the range of 7 to 8%. And now they're actually picking up. Beats only typically pick up when you're sort of coming out of a big cyclical downturn. So I would argue, the bottom-up consensus still has to catch up. If you now think about and look at things in terms of growth, we are on track this quarter for 12% earnings growth year on year. And that's a third increase in a row. So growth's actually accelerating. And if you look within the S&P 500, I would look at it as three groups. There's, of course, mega cap growth in tech, where everybody, the bottom-up consensus, us included, was looking for a slowdown.
Well, let me stop you right there. So much of the growth in earnings have come from the mega cap and growth names. The old adage is don't fight the tape, Binky. So do you continue to advise people to put money in there? Should big tech, actually have a permanent ensuite room in the portfolio house?
Yeah, so what I would say is, their growth sort of held steady at an astonishing number of, in the prior quarter, 40%, this quarter, 38%. That's not really a slowing. Right. But what is different about the quarter is that everybody else stepped up in a pretty big way. So I would divide the rest into two parts. There's, everybody, and then there's energy and materials, which earnings are down 20-25%. But for everybody else, growth is very healthy, 8%. And that's actually where we are allocated in the cyclical parts there.
Well, let's go. Let's stay on this vein of mega cap growth tech. Is it Apple, Brian? Apple earnings came out, top and bottom line beat. No real substantive mention of anything AI. So what is really driving the stock? Is it simply, stock buyback? Some would call that financial engineering.
Well, it was really a magical night for Apple, and I think shocked the bears. The setup was perfect. The data points coming out of China were horrible. The chip suppliers supporting Apple were blowing up days before they reported. And so expectations were very, very low. And so to come out with a beat in the quarter and then an outlook that is in line to a little better than the street, what just shocked Wall Street last night.
Okay, but can I just say, we still saw iPhone sales drop 10%. I know the expectation was for a fall of 10.4%. But year over year, and Tim Cook said it was tough comps year over year, but okay. Listen, the local news cynic in me, where we're always looking for the negative side, and I don't mean to do that in many cases, but is that they went with such a big share buyback to cover over, put some grass over what was kind of a dirty picture.
Yeah, I think it definitely helped. There's no doubt. It's the biggest buyback in corporate history, $110 billion. So that helped.
Would they have done that if the iPhone sales were much better?
Last year they did $90 billion, so maybe it would have been $100 billion. I think they would have increased it, but maybe not that much. But you do. The one issue is a year ago they had $5 billion in sales from replenishing demand that was not available in the December quarter because of the plant shutdowns in China, right? So when you take that out, total sales rose about 1% instead of down 4%, and iPhone was about flat.
You've got a
And
buy
so-
rating. You like it no matter what here. But there was something in your note that I wanted our viewers to see, because it was a macro picture, and then I want Binky to comment on it, but let's put it up. And you used the term economic quagmire. You said, we believe the darkest days of this economic quagmire are ahead of us. What quagmire? I mean, we still have 175,000 job growth. We've got strong, durable goods sales, consumers holding up. Really quick, and then I want Binky's response.
It's really unclear to me what's happening here. I just don't. I don't
Well,
think.
quagmire's pretty clear.
I don't think the economy is as strong as the numbers suggest.
Okay.
And I think people are still struggling with inflation. Look at people aren't going out and buying lattes in the March quarter,
Starbucks
right?
and McDonald's earnings were hurt. Okay, so what say you, Binky? People at the low end are truly struggling.
So, I like to hear these kind of expressions about the quagmire and how bad growth is in the economy, because that's actually exactly what has powered this rally from late October 2022. Mm-hmm. Remember that over this time, if you're back in 2022, everybody's calling for a recession. Early 23, everybody's calling for a recession. And they positioned that way. And so when it didn't happen, we've continued to sort of move up. Mm-hmm. What I would say is, if instead of listening to this narrative, you just looked at the data, you would see that the biggest part, basically, of the U.S. economy, which is the U.S. consumer, and I am talking top down, the aggregate consumer, but his spending has been growing steadily at 2.5%, for the last 10 years, I would say. And there's a blip in the pandemic, of course, down, but there's actually been absolutely nothing to see. So has been really easy to be very bullish, because everybody's talking about we're going to hit a wall, but everything looks pretty normal.
What may be the final answer is how many brand new iPhones, when they roll them out, people will buy. Good to see you both.